Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Thursday afternoon is Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update to watch with technical levels in the Nasdaq-100. And Brian, it certainly has been a rough couple of weeks for the index with some concerns around big tech growth names.
Yeah, absolutely. There's been, a number of events that have come out that have created some volatility, some market data points, as well as some economic data points that has caused some volatility in the rates complex. Rates are going higher. We had a weak payrolls number on Friday, which actually saw rates reverse and come in sharply. That was followed by the CPI number yesterday, which was very high, and so we saw rates all of a sudden spike back up to the upside. So Nasdaq 100, a lot of the growth names have really been getting have been responding very strongly to a lot of these different data points and mixed signals.
Right. There's certainly this confluence of data points are, the tech names are going to be sensitive to those, which is kind of interesting, Brian, because we knew these things were going to happen. We knew inflation was going to come back into the system. Again, at the end of the day, we are at very low rate and inflation levels. But I think the fact that's actually happening could have some investor spooks. So with that said, let's take a look at your charts this afternoon. We'll start with the Nasdaq 100 with some fresh levels to watch because we've, a little bit of a percent drop there over the past week.
Yeah, absolutely. So, this is the range we've been looking at, the levels we've been looking at for a few weeks now. The prior high back in February at 13,880. And we did get above that briefly to a high of 14,100. That was back in mid-April. And then we established the lower end of a range at 13,700. So 13,700 to 14,100 has been the range that we've been trading in there for a few weeks. And then you can see the real breakdown occurred a week ago on Tuesday, May 4th, when we gapped lower below that range for the first time. And that was the first indication that we had, pretty good confidence that, all right, the picture has changed here. We've gone from sideways consolidation to a move to the downside. We blew through some moving averages as well. We did get back up into this zone, but notice where we stalled. We stalled almost exactly at the top of the price gap. We got up there, just marginally, but it then quickly rolled over. So this was the Friday's jobs number came out on this date, and then the CPI number, which came out yesterday when rates spiked higher. We said pretty sharp move lower in the Nasdaq 100 again. So if we look here, this is the interest rate chart, and let me maybe switch this to a daily period. But you can see there's been a lot of volatility in the long 10-year yields. Where this was on the response to Friday's payroll number. We had a big spike down, but it did recover, and then it's been trading higher, largely on yesterday's action with the CPI. So this 175 level has been pretty key on the rates complex front. If we go back to the NDX, we look at the weekly time frame. There's a couple of things that stand out here. We have a potential here for a double top pattern. We had been consolidating nicely over a few weeks along the prior highs, and then last week's decline followed by this week's downside price action, that's kind of given way. So that potential cup and handle pattern, I think, is out the window here. It remains to be seen how far we will move lower. But the key level, if we do go down from here, will be the recent low between the February and April highs, which would be at about 12,200. But just quickly circling back to the daily period chart, one thing to definitely keep in mind here, I don't want to get too bearish just yet. A lot of individual names have certainly seen some pretty steep declines, but the index overall is down about 6% from the highs, maybe 8% from the highs as of yesterday's low. And we're still holding this rising uptrend from September's low. So, there's a couple ways to look at it. If your glass half full, you could say, yeah, we've had a pullback and a lot of individual names have seen some steep declines, but the trend of higher lows is still very much intact. There is potential here if we look at, again, the weekly pattern of a double top pattern, but that would be something that would really take a while to play out. We'd have to break down below this 12.2 level, and whether or not we even get there, remains to be seen. The big concern is that because we've had this big move to the upside with very little pullback along the way. I think the worst decline was last fall. We had about a 13-14% decline here. This decline here was maybe about 8% or so, or let's say it's 12% that we saw in the first quarter. So even if we were to get another 12% again, it's not much lower from here, back down to those lows in the first quarter around 12.2. So, it's, until this level here breaks out, that rising trend line, I think, the bias is for the bears to try and prove that, a deeper correction is underway. Until then, I'm still optimistic on this market.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.